Okay, so let's talk about personal and dependency exemptions. Of course, the easy part is the taxpayer and if applicable, the spouse. The difficult part is figuring out these other dependents. So let's look at that. First requirement is that a dependent, in order to be claimed as a dependent, must be a citizen of the U.S. or resident of the U.S., Canada, or Mexico, must not file a joint return with the spouse. The exception is if no tax liability filing jointly or separately. So, it might be a situation where you've got a married child who happens to um, not have an income, so you're having to support them. So, it doesn't happen often, but it does happen. All right, so the last requirement is, and the main requirement is that this person who you want to claim as a dependent must be either a qualifying child or a qualifying relative of the taxpayer. All right, so what does it mean to be a qualifying child, first of all? All right, so you have to meet four tests to be a qualifying child: the relationship test, the age test, residence test, and support test. And so the relationship test, they have to be a certain relationship to the taxpayer. And so taxpayer's son, daughter, stepchild, eligible foster child, brother, sister, half brother, half sister, stepbrother, stepsister, or descendant of any of those relatives. So a descendant would be someone who is a child of one of those. So, for instance, um, if the taxpayer had a brother who died or can no longer take care of their child, that child would be the taxpayer's niece or nephew. Um, and if they meet all the other requirements, they would at least meet the relationship test, is the main thing there. The age test. The child must be younger than the individual claiming the child and uh, either be under age 19 at the end of the tax year in question or under the age of 24 at the end of the tax year in question if they are a full-time student. And full-time student is defined as being enrolled full-time for at least 5 months out of the year, 5 consecutive months out of the year. Now, if someone's totally and permanently disabled, regardless of age, they're considered to meet the age test. So you could have a totally and permanently disabled 30-year-old or 35-year-old, and that, so basically they just waive the age test for those people. Residence test. The qualifying child must have the same residence as the taxpayer for more than half the year. Well, what if that dependent is off to college for most of the year? Well, in that instance, that's considered a temporary absence and is not counted towards or subtracted from the half year uh, requirement. So, if you had a student who was away 9 months out of the year, just there in the summer, that's not going to disqualify them as long as that's their primary residence. Last but not least, qualifying child must not provide more than half of his or her own support. Now, this relates to uh, income that the child earns, at least as it deals with children of the taxpayer. So in other words, if the taxpayer has a child that they want to claim for as a qualifying child, and let's say that some of the child support, maybe even over half the child support, is provided by a scholarship, that's not going to be considered. So it's excluded from the support computation. Now, what about if, let's say, the grandparent of the child is trying to claim dependency exemption? Well, in that case, then the scholarship will not be excluded from the support computation. So it only applies to parents, not grandparents or anybody else for that matter. All right, well, sometimes you could have more than one taxpayer qualifying to exempt a dependent child. And so what if you have two parents who don't live together who both qualify under the requirements? Or let's say you have a situation where a parent and a grandparent, the child lives with equally, and they provide support for the child. Well, parents are going to be the ones who get, in that case, first preference to the dependency exemption. What if you have a situation where parents are sharing custody equally? If it's unequally, the parent who is lived with the most gets the exemption. If it's equally, the one with the higher AGI gets the exemption. All right, so we have an example here. Rodney and Anita have two children, Braxton, age 12, who lives at home, and Tara, age 21, who is a full-time student and does not live at home. While Tara earned $9,000 in a summer job, she did not provide more than half of her own support during the year. Are Braxton and Tara qualifying children for Rodney and Anita? And so obviously Braxton, age 12, is. The question is Tara at age 21? And it points out that she's a full-time student, so despite being over 19, the fact she's a full-time student and not 24 or older, they can count her. She does not live at home, but that appears to be because she's away full-time as a full-time student, so that would not count toward the half-year requirement as long as that's her principal place of residence. And the $9,000 is not a problem as long as she didn't provide more than half of her own support during the year. So yes, both do meet the requirement. You might use this little setup to go through the analysis. All right, another example, Braxton's uncle Sean, who is Rodney's brother lived in the Halls home, the same home Braxton lived in, for more than 11 months during the year. Does Braxton meet the requirements to be considered Sean's qualifying child? That's kind of a convoluted example, but let's see. Relationship, yes. Braxton's the son of Sean's brother. What it doesn't mention here, and kind of throws everything off, is well, of course, the age. Braxton's less than 19, he's 12. They lived in the same residence as Sean for more than half a year. And supposedly, yes, does not provide more than half support. So, I mean, technically, yes, but again, if you've got a tiebreaker, it goes to the parent first. So, Rodney and Anita are going to get this. Braxton, number 3, Braxton is considered to be Rodney and Anita's qualifying child, and he's considered to be Sean's qualifying child as well. Under the tiebreaker rules, who is allowed to claim Braxton as a dependent for the year? And of course, that would be Rodney and Anita. All right, what if somebody is not a qualifying child? Well, next thing you do is you go look to see if maybe they're a qualifying relative. And so the qualifying relative exemption is met if the 3 following tests are passed, I guess you might say: the relationship test, support test, and gross income test. And so the relationship test is much broader than for a qualifying child. And so for a qualifying relative to meet the relationship test, note in at least one instance, you don't even have to be a relative. You just have to live with the taxpayer the whole year. So you meet the relationship test if, 1, you have a qualifying family relationship with the taxpayer, or, like I said, you meet the qualifying relative member of the household test. So a qualifying family relationship under the qualifying relative exemption are the following: a descendant or ancestor of the taxpayer. So that includes taxpayer's adopted child, stepchild, eligible foster child, and a parent includes a stepmother and stepfather. So descendants are below, ancestors are above. So for instance, descendants would be your children or your grandchildren. Ancestors would be your parents or your grandparents, that sort of thing. Next, a sibling of the taxpayer, including stepbrother or stepsister, a son or daughter of the brother or sister of the taxpayer, so nephews and nieces. Cousins do not qualify. A sibling of the taxpayer's mother or father, so aunt or uncle of the taxpayer. An in-law of the taxpayer, so mother-in-law, father-in-law, sister-in-law, brother-in-law, son or daughter-in-law. All right, so this last one, a person this is the second one, the member of the household test. A person meets the qualifying relative member of the household test if that person has the same principal place of abode as the taxpayer for the entire year. Even if the taxpayer does not have a qualifying family relationship with the taxpayer. So you might have a situation, I've seen this before, where let's say a kid in high school, for whatever reason, can either doesn't want to or can't live with their parents. And so they go live with uh, parents in the household of a friend. And so question is, who gets the dependency exemption? Well, as long as that uh, child lives in the friend's parents' home for the whole entire year, they meet the member of the household test, and the friend's parents would be able to claim that child as for a dependency exemption. All right, let's talk about the support test. A little bit different. And so the support test requires that the taxpayer pay more than half the qualifying relative's living expenses. Well, that's different, right, than what we saw with the qualifying child. There, the qualifying child couldn't provide more than half their support. If they did, they were disqualified as a dependency exemption. Here, the taxpayer has to provide more than half the qualifying relative's living expenses. And so note what living expenses are: rent, food, medicine, clothes, etc., etc. Just as with qualifying child support tests, scholarships of children of a taxpayer who are full-time students are excluded from the support test. So you could have a situation where you have a child who's a full-time student who's over the age of 24, and you're not going to get them as an exemption under the qualifying child provisions, but possibly you could here. Gross income test. This is the one that sometimes just busts everything. Requires that the qualifying relative's gross income for the year be less than the standard exemption. Personal exemption, I mean, $4,050. Well, that's pretty low. So that's the one that can usually trip people up. All right, so we have an example here. John's a 22-year-old student who has lived in the dorms for most of the year, but spends the rest of the year living with his parents. He earned a $5,000 scholarship for the school and has worked hard at supporting himself through the school, earning $6,000 to pay for his own expenses. His parents have supported him by paying $7,000 for food, clothing, and lodging expenses. John's parents able to claim him as a dependent. So I'll let you think about that one for a little bit. So here, you'd have to look at two things. You'd have to look and see if he's a qualifying child. And then if that doesn't work, go and look and see if he's a qualifying relative. Here, he appears to be a qualifying child because he's 22 years old. He's apparently a full-time student. We have to assume he is, since he's in the dorms for most of the year. So he's under 24, full-time student. He earned $5,000 scholarship But we learned that for parents, that's not a problem in claiming uh, the child as an for an exemption. The fact that he earns $6,000, certainly that would blow the qualifying relative exemption, since the income test, he can only, well, he has to earn below $4,050. And let's see, his parents provided $7,000 for his support, and all it says under the qualifying child is that the child not provide more than half their support. So it appears that he's a qualifying child but not a qualifying relative, and so that's what this shows. So bottom line, when you're doing this analysis, check to see if they're a qualifying child, go through the steps. If they are a qualifying child, stop. Your analysis ends. If they don't qualify for an exemption as a qualifying child, then check to see if they qualify as a qualifying relative. All right, let's talk briefly about filing status. Married filing jointly, married filing separately, qualifying widow or widower, also called a surviving spouse, single, or head of household are the 5 different filing statuses. If you are married on the last day of the month, you have the option of married filing jointly. I said last day of the month, last day of the year, tax year. And of course, if one spouse dies, the surviving spouse is considered to be married to the decedent spouse at year end, unless the surviving spouse remarries before year end. So we'll look at what happens with that surviving spouse here in a minute. If you file married filing jointly, of course, you get some benefits of the higher standard deduction, the plateaus for the differing tax brackets are at a higher level of income than they are for single, head of household, married filing separately. So you get some benefits of married filing jointly. The downside is that if you file a tax return married filing jointly, it's a joint and several liability, meaning you both owe the tax regardless of whose earnings they're attributable to. So sometimes that can be a real problem, especially in cases of divorce where one of the spouses has hid income and they get they don't find out until sometime later in a tax audit that there's an additional tax owed, and so that can be a real problem. Married filing separately is not a good thing from a tax standpoint, because the tax rates are not as good as married filing jointly. There's also some other requirements as well that I'll not get into, but at least from a non-tax standpoint, it might be strategic to file a married filing separately. As I mentioned, if you have, let's say you marry someone who already has tax problems and you don't want them, you don't want the IRS levying your tax refund, then don't file married filing jointly with your spouse, or better yet, don't even marry him. Sometimes it's kind of hard, cold reality, but sometimes that's what's required. As I said, if a spouse dies during the particular tax year in question, the surviving spouse gets to file as a qualifying widow or widower. What that allows them to do is file as married filing jointly rather than single or uh, head of household, which are not as favorable uh, benefits as, from a tax standpoint, as married filing jointly. And so in the year of death, the surviving spouse gets to file as married filing jointly as long as they don't remarry. Also in the 2 succeeding years after date of death, they get to file as married filing jointly. They only get one personal exemption for themselves, not the deceased spouse, obviously. The one little catch in all this, in order to qualify as a surviving spouse, the surviving spouse must maintain a household for a dependent child. And, you know, you look to the definitions. And so it must be dependent child who is either a child or stepchild, not an adopted child, for whom the taxpayer may claim an exemption. So you would go back to your exemption rules to see if it's someone you can claim an exemption on. Single, if you're unmarried at the end of the year, you can claim single unless you qualify as head of household. Last, head of household. You're either unmarried or considered unmarried at the end of the tax year. We'll talk about what it means to be unmarried. In order to qualify as head of household, you cannot be a qualifying widow or widower, surviving spouse. You have to pay more than half the cost of keeping up a home during the year, and also a qualifying person must live in the taxpayer's home for more than half the year. The exception here is if the qualifying person is the taxpayer's parents. So here, for head of household, it does not have to be a minor child or a child of the taxpayer, as with a qualifying widow or widower. Here, it can be any qualifying person, and you know, if that qualifying person is your parent, they don't have to live with you. Now, what if it's your grandparents? Well, if it's your grandparents, then they've got to live with you for more than half the year. So, could be a qualifying child, could be a qualifying relative who is the taxpayer's mother or father. Again, the taxpayer, taxpayer or the parent does not need to live with the taxpayer, but the taxpayer must pay greater than one half the cost of maintaining the separate household for the taxpayer's mother or father. Again, the parent must qualify as the taxpayer's dependent, which you go back to the qualifying relative rules for that. If it's a qualifying relative who's not the taxpayer's parent, the person must have lived with the taxpayer for more than half the year, must qualify as the taxpayer's dependent, and must be related to the taxpayer through the qualified family relationship. All right, question. Assuming that last year Rodney passed away and during the current year Anita did not remarry but maintained a household for Braxton and Tara, under these circumstances, what would Anita's filing status be? Well, uh, since she is a surviving spouse, she'd get to file married filing jointly. Assume Rodney and Anita divorced last year. During the current year, Braxton lives with Anita, and Anita pays all the costs of maintaining the household for herself and Braxton. Under these circumstances, what's Anita's filing status for the current year? I'd say she is a head of household. Assume Sean, Rodney's brother, lived with the Halls, but Sean paid more than half the cost of maintaining a separate apartment that is the principal residence of his mother, Sharon, whose gross income is $1,500, because Sean provided more than half of Sharon's support during the year, and because Sharon's gross income was only $1,500, she qualifies as Sean's dependent, qualifying relative. In these circumstances, what is Sean's filing status? Head of household. Okay. All right. So that's it. The end for chapter 4. Hope you enjoyed it. Hope it wasn't too painful.